Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in Bookmap and YouTube? Please get a screen and audio check in Bookmap and can I get an audio check in the Bookmap, Discord, Trader Lab, and YouTube? Can you guys hear me there? I'm going for audio and screen check. Are you able to hear me in Discord? Well, I'm going to continue if you can't hear me in Discord. Uh, Well, good morning, everyone. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. It's based on structured trades, and these trades are available to everyone in the Bookmap Discord Trader Lab community, and there is no cost. In addition, there is a library of webinars as well as 60 PDFs of structured trades that I review here in the stream in order to give you a basis of understanding of market mechanics, how it works, and how you might get in alignment with structure in order to participate in the market. And naturally, you have to vet all of these for yourself and find where they might fit in a vetted structured trade plan. In addition, if you are part of the Trader Lab, you can participate in a community of like-minded traders that have come together to leverage their collective experience. And one more item, if you are a Bookmap subscriber, you will have access to specific webinars for Bookmap subscribers that are exclusive for them, as well as the Bookmap Academy, which is coaching and mentoring with traders who are, shall we say, bringing their setups and trades for improvement. And I don't know any other place you can get this. Now, let's talk about a Bookmap subscription. I'm not here to suggest that you subscribe to Bookmap. I am here to suggest that you take advantage of a free version of Bookmap. It's called a digital version, and then you would be a Bookmap subscriber and you get access to the other education. When I started, I could not get my hands on Bookmap. I had to subscribe to it, which I was glad to do because I wanted to use order flow, but I could not trade and watch the limit order book and the flashing numbers and all the nonsense that goes on.
Hey everybody, can you hear me? This is Bruce.
I can hear you.
So we'll get Tom's audio going here in just a second. Over in Discord, I believe everything's fine.
Okay, let me. I have a little audio problem here, guys.
And why don't you try rejoining? And I'll invite you back up to the stage. I don't know what the issue is here.
Yeah, I'm back. Can you hear me? Are you guys able to hear me now?
Yes, there you
are. Okay. All right. Hopefully this will do it. Okay. Do we have a screen going also in Discord?
Yes.
Okay, great. Thanks, Bruce.
You're welcome.
Bye. Sorry, everybody. General disclosure, all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and it's not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is for educational purposes only. Grab a pen and a piece of paper. I'm going to give you a couple of notes, some statistics. This is based on the process I share in the Trader Lab. This is auction market theory, how the market works, how you might get in alignment with it. And if you missed it before, there are 60 PDFs of these structured trades you can download and reverse engineer, as well as a library of webinars. It's available to everyone at no cost. And there is a free digital version of Bookmap if you want to take advantage of Bookmap exclusive education, which is for subscribers only. But I think, the concept of free is good, as my mother used to say. So if you've ever wanted to get your hands on Bookmap, you can, and it comes with data and everything else. So you can kind of get your hands on it and see maybe what it might offer you as far as creating edge and advantage over other traders. Now, it's definitely, any tool is not for anybody. Bookmap may not be for you. Personally, I wouldn't trade without it, but that's just me. And order flow puts you in another place as far as how close you can get to the market participants and their behavior. It's another dimension. It is really, in a competitive environment, in my opinion, you want to have the tools that help you get an edge over your competition, which is other traders. Now, let's write some statistics down. Obviously, if you were up this morning, we had a large gap open. If you remember at the end, I think yesterday, I narrated in the Trader Lab, I think it was a short, can't remember from where anymore, but it was like a 40-point trade to take out yesterday's low of day and the previous day's low and the potential to go further. It took out yesterday's low and the previous day's low into the stops, which was the priority of inputs. And it was a 40-point trade. Now, the point is not that it was a 40-point trade. It could have been a 4-point trade or a stop. The point is it was auction-based. That means there is a way, potentially, for traders who develop an understanding of market mechanics who participate in rotations. Rotations are random. The mechanics of how the market operates, even though the environment is random, the auction is not. So there's no such thing as predicting, but in trading, I believe, at least my experience is, it's about alignment. So if you can define what alignment is, then you can use statistics, as I'm going to share with you, and write these down, and you have to vet these for yourself. If we open in a gap, so it's higher outside of range, here's the possibilities. This is called, now you notice the all-time high was there, give or take a smidge. This is the ETH volume point of control. Now in the auction, points of control or high volume areas are areas of agreement between participants. It's like you go into your store and I do use metaphors. It's like you go into the store where the retail price is and everybody agrees to do business, buyers and sellers. However, if we open above it, we have the possibility to rotate up and then come back and return to it. Think of it like this as a shopper. If the price gets too high, we don't know where too high is, by the way. That's part of the joy. And we find too high and you run out of buyers. Think about going to the store and the price is just too high. Well, you're in this, some in the store are going to throw that product in the shopping cart because they just don't want to go elsewhere. So there'll be buyers away from the fair price, but there won't be a lot of them, maybe, unless the fair prices change, and then we'll have a new retail price. But let's assume we come outside and it's too high. What's the nature? I'm not paying that. Everybody leaves this and they come back here. So the probability of returning there is about 79%. The probability of taking out the ETH high, which I think, where is the ETH high, guys? Can you confirm that for me? 5779. It's under here. So 5779, I just got to get this on here for you since it's covered up over here, is the ETH high. And you'll see why this is important in a moment. And the probability of getting there is 76%. I don't know about you, but I like these. Now, I'm spending time here. It's very important. Naked volume point of control, 5760. This is the highest volume from that was sitting out here that was not tested previously. We opened above it. So the possibility is to go open here, test that, test this, test this. There's more. You go, really? Yes, there's more. There's a 63% probability of testing the previous high or low, which means filling the gap. Now, I think getting to yesterday's low might be a reach. What do you think? So where's yesterday's high? It's here. Okay? Now, one last little piece, and then we're ready to rock and roll, as they say. This is an intermediate time frame high volume node. Now, I'm talking fractals, or as you guys think, multiple time frames. And I'm not going to spend a lot of time because I don't have a lot of time. But there's loads of time and loads of information in the Bookmap Discord Trader Lab community, and there is no cost for you guys to visit and participate in building out a business plan for developing a trading business. Now, like everything, it may not be for you. Trader Lab might not be for you. And the work that is required to get to a place of confidence and statistical probabilities takes a lot of work. Nobody can hand you the solution, if you will, because a lot of it's wrapped up in your psychology. But what is this? If this was a retail price that we had rejected previously, and now we are above it, and we come back to it, if it's too low, we can continue higher. But if we break below it, we can continue lower. We can come here. What is this? An intermediate time frame version of that. So this is called trading in fractals. It's understanding what creates levels in the market and why some levels are more material than others. And like everything in trading, the best you have is maybe. Write that down. We're not in the business of prediction. I know we'd love to be able to always be right. I get it. So do you. But the fact of this business is it's like gaming. It's like being in a casino. And if you're in a casino or you own a casino, you know you have no control over the cards coming out of the deck. And write this down. And you don't control how gamblers play. So what can you control? Same thing we can control. Having a structured trade plan that has statistical edge and only getting involved in the market when that edge shows up. That is, in my opinion, the business of trading. And if you come at it from that angle, you're not going to be focused on trying to avoid the pain and to be right. You're going to focus on a statistical edge that extracts dollars over time from the other participants. Not the last trade, not the next one, not the next 4 trades. It's all of them. And that's the business of trading. Now, here's the RTH open. Now, this is interesting, and this was, for me, a hard trade. Here's why. This is my first target. What am I going to do here in a tenth of a second? Nada. This has what? You wrote this down. A 79% probability. Now I'm gapping higher. It can do anything. It can gap, run, right? Never come back. Unlikely. Or gap, find too high someplace, and then come back here and lower. So that's what I know. Now, the thing I don't know is what it'll do and when and where. How do you like that? But I'm going to show you structured trades. Remember, these are available to all of you in the Bookmap Discard Trader Lab community. So we open. This is the ETH high. This is the first target. Now, I'm not getting long to go here. I know it has a high probability. I'm thinking responsive selling. Now, if you've been following the stream over these years, and I appreciate you guys visiting the Trader Lab, whether it's here in YouTube or if you've joined the Bookmap Discard Trader Lab community, which you can do, by the way. There's a link in the bottom of YouTube, and there's no cost. I always say something that's I'm consistent. I'm not saying that's magic. I'm saying consistency can be measured. The market is random. We can only measure the results of a plan and a consistent application of a plan. We cannot measure the random behavior of the other participants or events that may come in and disrupt the behavior of those participants. It's just like the casinos can't control what the gamblers do or the cards. Same. So if we can accept that, then we have to work from another angle. So the angle here is getting short. The market goes up to go down, and write this down. The market goes up to go down, and the market goes down to go up. It seems interesting, doesn't it? And maybe logical. So let's look right here. Now, this is a very aggressive trade. I would suspect many traders were not able to get on this, but there are other ways to get on the trade, and I'm going to show them to you. Because I always say in Trader Lab, this is not where you want to trade unless you have substantial time in and development. And the big obstacle with this is you can get whipsawed easily on the open. You can also, it's also fast. So what I suggest in Trader Lab, and of course everybody does their own thing, is that you work this and narrate it to develop unconscious competence, but don't trade it, because you're going to have poor execution, maybe FOMO, and you're going to be emotionally charged. RTH open is right here. There's the RTH open. This yellow line is called the developing volume point of control. Let's take a look at what we see here. This is microstructure. And again, these are not trade recommendations. You have to know where your trade is before it happens. Most retail traders are playing a video game. They're just saying, oh, there's a sell, let me sell. That's not the reason to get short. There's other reasons to get short. The statistic. So I'm looking for this, which is tested right on the open, and I see the following. Now, this is very hard, and I'm not suggesting anybody do this unless you already got the other broad strokes nailed. Here's your sellers. Let's go into order flow. This is a stop sweep. There's 23 buy stops going off. Thanks for playing. There's an iceberg. Not material right at the moment. Let's look at this. So right here, I have delta. Delta, and I always have to say this so you guys don't think this is green bubble, red bubble. It's not. Green bubble's telling us the aggressors. The aggressors are initiators, buyers, those who are bailing out with market orders if they were short, and passive sellers. So that's what we got here. And the thing about this is we don't know if the sellers are going to continue higher up to this liquidity that's resting here. That's the heat map. Or if they're being absorbed. No way to know. So here's what I see. A seller here, buyers here. No way to know what's going on. I don't know. Sellers are below this buyer. I get a buyer here. My VPOC, which is my retail price, where the highest volume is sitting right here. So right here, it's a suspect. Sellers are here. By the way, why did the market go up here? There were buyers here. These sellers were absorbed. This creates, call it a sandbox. I'm going to draw a little something so you can see what we're looking at. So buyers are here, sellers are here. Right here, who's going to win? Here's my buyer. This buyer, because this guy was absorbed, needs to clear this to go higher. These sellers were absorbed. We have to break this to go lower. When the sellers get below the buyers that were here, it sets up a trigger. This is the advanced Trader Lab methodology. And I'm just going to say, not necessarily anything you guys got to be thinking about. So this is the first short, very aggressive. Now let's come back here. So when we clear this is your trigger here. That's a trigger. This is the micro high volume. It's right there. Right? You see where the variable high volume node is? This is the micro. And I always want to stress this. This is not where you should trade. This is where you should be getting educated. Here's the buyers. So the sellers are here. Right here are buyers, limit order book. Now we can't see them. They're passive. That's why you don't know they're there. Buyers are up here. Now it could very easily come over here. This is the opening swing high and take this out, right? You'll take a stop. Are you prepared for that? You have to be. It's the price of admission. Now, buyers are here. What do we know? Buyers were absorbed here. Sellers are here. Notice where we come. Here. What was too high? The high volume node is the shoppers. In this consolidation, this is the retail price. When you leave the store, this is like your store down the street. It's a little mini mart. You guys have mini marts, right? Or something like them. Test here. Buyers are here. And why don't we go up? There's a passive side. The sellers that were here, and I make an assumption because why are sellers selling this? Well, if this is too high, if that's too high, and I come back up to my volume where my seller was over here, are the sellers still going to sell? I don't know. Do you? Nope. So that's why we take risk. Now I come down. Where's my buyers? They are here. Let's watch. Buyers, buyers, buyers. What's too high? These buyers were absorbed. I got buyers here. I got buyers that were absorbed, which means sellers are here. This is my current retail price. This is, and we would come back and check. So as long as I'm under this, I'm good. This is a scale. So if I took my short here or wherever, I'm now risk neutral. My stop is up here. And where am I going? I'm trying to go here. Why? You remember, 79% probability. You got to vet this for yourself. Target. Now, what do we do next? Let's watch. And if you have questions, please post them. Now, right here is the target. So for me, I'm not really going to talk about my trades. I'm going to say for the Trader Lab structured trades, which you can download, so you can learn this. And I believe anybody can learn the trade if they put the time in and have, of course, the capacity for work and thinking and multitasking, because it's multiple time frame, right? So, but being able to do it is a whole different issue. And we work on that in Trader Lab. Those are typically psychological impediments. I'm going to show you another trade. And this is all Trader Lab oriented. Let's think logically. If this is too high, the shoppers go, I'm not paying that. And this is too high. I'm not paying that. We check it. I'm out of here. And where do we go? This was the ETH volume point of control. So what that is saying is, if right here, this is too low, this might set up a long. I'm saying might, but it didn't. What did it set up? It broke below. Why would we not take a long? Because this is an open target, 57.60, and fill the gap, yesterday's high. And what was the statistic you wrote down? I know you guys kind of cruise in and out. 63% probability we get to either yesterday's high or low. And you remember where yesterday's low was. So don't you think with that probability, this is a fair shot or this is a fair shot? So the first target is this. Now I'm going to show you a continuation trade. Now this is a little more advanced, but this is Trader Lab methodology. Let me show you. So we're coming down to the target, 82-ish or whatever it is, probabilities, 80%. Past performance, not indicative of future results. Here's microstructure. Now I'm going to take you down in time frame as you think of it. I don't use the clock. So for me, it is really fractals. Just think Russian dolls, Matryoshka dolls. So now we don't know what's going on. This is the target, right? So as I'm going down, I'm going down using a similar concept in microstructure. I'm going to want you to follow it with me. The same thing I showed you up here, I'm going to now go down in quote time frame. Here's the volume. It's right there. It's a consolidation. It's the same concept. What happened here? This is the beauty of Bookmap for me. I can zoom in, out, and I can look. All I'm seeing here is what's right here. I can isolate these structures because I can read it. This is language. I don't use any indicators. I know. And why not? Been there, done that. What did it do for me? Wasn't good. Conflict, ambiguity, and our nature is to put more indicators on, more time frames. And the reason we do it is because we are seeking to avoid the emotional pain of loss. We want certainty. And unfortunately, we're in an environment where it doesn't exist. That is part of the joy. So right here, micro high volume, sellers. Where do I come back? Right to the bottom of the consolidation. There, too high. Sellers in control here. Where's my buyers? I don't know. You see any? I come up here. What's up here? My high volume is there. I'm below it. All right. Here is my buyers. Do they get any traction? No. Thanks for playing. See you later. High volume is there. I break. Where do I pull back? Here. Bottom of the consolidation. There's my buyers. I got buyers here. And right here, look where we came. So that's why I was saying this might be a reversal. But where's my resistance? It's right there. So I have to look right here and make a determination. Is this it? And now we're going to check this. Could do it. But big gap. Now I break under here. Now this was the target, don't forget. Let's look for another entry. Where might it be? Might it be there? If this right here, when we come down, is too low, we can come back. If I can't clear this and I break under, now this is too high. Same concept. This is a short in the Trader Lab. Now let's look at how we might deal with this. So too high, break. Right here, you got resistance here. You got your high volume here. And right here, it's anybody's guess. And I mean anybody, I'm talking about me. Somebody else may know. Me, haven't figured that out yet. I don't know. So what I know is once we break below, this is what I'm going to lean on for continuation trade. And I posted this in Trader Lab, I think. I'm posting during the session in Trader Lab with conditional behaviors and structured trades. This is resistance. Let's look. Right here. So once I'm below this, there's my test. sellers. I'm now looking for shorts for continuation. Where's my volume? Well, I got this, and I have now this very fast, bang, bang. I can't do anything with it. I was looking at this. I wanted to, let's just say, put a trade on here. And I was stalking it, but I didn't have a location. I could have entered here, right here. That's one entry. And this up here is another entry here because of the volume. So let's look at the microstructure. And this thing, when this happened, it just sort of catches me by surprise, but that's trading. There's the seller. Here's the test to the bottom of the consolidation. That's a short. Now, where do you put your stop? It's got to be over here. Because why? This is the last place where the sellers took over after a consolidation. So I perceive this as resistance, and I perceive this as location. Just letting you know how I do it. I'm not saying it's good. You guys can probably figure out a better way to do this. So anyway, short here, short there, Trader Lab. All these are shorts in the Trader Lab subject to your plan, and you have to vet a plan. And your stop, remember, is here, not there, because you'd be taken out, so I don't put it here. I'm always going to be a little further away. And if the range is to the way I can protect my position is too far out, I have nothing to do. I just wait for the next bus. Now, there's more. This is called VPOC migration. Let's label this. This is now the new retail price. So we are sequentially moving lower in the high volume process, if you will, the retail shopping experience, to use a metaphor. Thanks, Ned, for that. By the way, Ned in the Bookmap Discord Trader Lab posted something that's up now in the PDFs. It's a very good synopsis of this process. It's called auction market theory. How does the market work? Most of us think the indicator defines how the market works, but actually it's the other way around. Participant behavior and the process of how the market actually operates determines everything. Indicators are the output of behavior. I get it. But how about being able to know right here? Is that better instead of waiting for something to do crossover or whatever it does, which I don't know what it does. I don't use them anymore. So too high. This is VPOC migration. We are in a directional move. Let's look what we're doing here. We are going south of the border, short, add, VPOC migration. This is in fractals. This is too high. This is now the new retail price in the developing time frame. I'm in a multiple time frame configuration, and until you understand it, it will be maddening. This is a potential add, and let me show you where we're going. We're looking for this. So when this drops down, this is called VPOC migration. I made these terms up. When I started doing this, nobody was doing it like this. And I'm not saying it's the best way to do anything. I'm saying it's a way that tends to work if you vet it. This is VPOC migration. This is a short. This is a short in Trader Lab. This is a short in Trader Lab. All of these have to be vetted, and we all take stops. So if you don't want to take a stop, you can't be in the business of trading. Now, I didn't say want to if you're not able to. Nobody wants to. So next target is here. Why would this be the next target? The same reason that was a target. The same reason this is a target. Now we have this, yesterday's high. Fill the gap. You could be out of the trade here, or you could be going for this. And let's look at this. Now, when you look at this, let me take you into Fractal if you want me to. I'm going to take you into multiple levels here so you can understand how you use Bookmap and Microstructure together. This right here is an auction. Break high, break low. That's a triggering structure. And for me, this is in alignment with that. Now, I know I'm showing you multiple pieces. The sellers take control here. The buyer is up here. This buyer was absorbed. Notice the iceberg. Buy stops. Icebergs are often on the other side. They don't have to be, but that's often what they do. Now you'll notice we're seeing absorption here. 1,200 icebergs. Hey, look at all these icebergs. Does that mean I should buy? No, it doesn't, because that's not a primary input. It is a tertiary input. To me, I want to be aware of participant behavior. But the truth for me, not you, me, is what do the participants say about price? Where is the absorption? It's there. Who takes control? The sellers, okay? Now I get my buyers. These buyers are under the bus, unless it changes. My sellers are still in control. My buyers take a shot. The VPOC comes down, new retail price, and the yellow line represents all the volume in the developing time frame. And my gap is open. And I got this, so I can go here and be done, or whatever. So sellers, come back and check. We're under this still. Notice the alignment. What that says to me, as I interpret it, it's not a fact, it's just my interpretation. Why did the buyers, the green bubble, why did it stop here? There's a passive side. That's the icebergs and whoever else is selling. The buyers are here. Why did it stop here? I got selling icebergs and I did not get above these guys. That means the sellers that are sitting up here are taking advantage of the counter rotations. They are selling. What happened right here? There's my buyer. This buyer is below these sellers and below the sellers above here. These guys are under the bus. There's the sellers. There's absorption right here. So I see my buyers going to the moon, Alice, except where's my sellers? They're here. Break. Buyers, sellers. Watch. So now I have microstructure here. Now, you don't need to be doing this. I only do this so you could see it. Notice, I want you to see how the market works. It works in what we call fractals. Too high. So too high, absorption is here. Break low. VPOC migration. What was this? VPOC migration. The trend is directional and down until it changes. I will show you the change. Now, let's follow the yellow brick road. Now, this is a target. We gapped over it on the open, and this was a retail price we had left behind when we were below. Yesterday, it was a target coming up, but we didn't get to it. Life in the fast lane. Nobody can predict anything. At least if you can, come to Trader Lab. Be very helpful, because I can't. And I used to think when I learned trading that it was about measured moves and that was about prediction. So I started in 1980 at the CME, and I took a course in classical bar charting. I said, hey, it's at the exchange. This must be how you do it, right? Well, no. So what happens here? Sellers, microstructure. You can see it. Where is it? Notice the little micro high volume. This little structure is the same as that. This is from the RTH high volume area left behind last time we were here. This is happening right here, right now. Buyers are here. You can see it right here too. Here's the micro high volume. You see it over there. Too high. I'm out of here. We get it here. Now I'm going for a target. That target was hit right here. So that could be the end of the trade. But what do I see here? Now, what's my statistic for yesterday's high? I know you write these things down, but I just have to remind you in case you're late to the stream. 63% probability in this condition that we'll check the previous high or low. Past performance, not indicative of results. You got to, do your thing. So we're looking for this. Now, let's talk about how you might manage the trade. This is too high. This is the target. And what do you see that's familiar? I break below here. Does this look familiar to, where to go? Whoop. Hold on, losing my place. This, when we took a short here, we are taking the shorts into developing high volume structures. And once we break below this, it's a short to there. If we clear this, this is the next high volume structure and so forth. This is all Trader Lab structured trading. Too high, target. Maybe done. Break low. Too high. Now this. It's all sequential. It's all random. Let's look at it. This is an ad or whatever. Down here. Where do we come back? Up here. Let's watch. Isn't that interesting, guys? Do you find this short, filled a gap, back here, another short, location? This is like real estate. Now let's look at microstructure. So there's resistance, there's alignment, there's absorption, there's selling icebergs, nice to know. There's the buyer, there's the absorption detector, which is really showing me what's happening here. I break, I'm testing this right to the tick. I see my seller, this is a trigger. I pull back to the micro high volume in here, which is saying in this little fractal, this is too high. Trigger. So this is a Trader Lab trigger. You can learn these. Check. Stop is up here or there. Up to you. Trigger. Check. Short. Where are you going? There. If you get under here. So the way I work this trade, and these are trades I take and that I created and have shared. And others, of course. But these are the primary trades in the Trader Lab. This is the swing low. So when I took this trade, I looked here and I said, well, my buyers came in here. This is where my resistance is. So what's the idea? You sell resistance, right? And what else do? You buy support. But, and here's the but, if I see my buyers here, let's come back to what this looked like at the time. I'm going to show you kind of a way to think about this. Where was my high volume over here? It's here. Where else is it? Down here. So what I know is the following. I had volume here. I broke under it. These sellers were absorbed. My buyers are here. So my sellers are here. Sellers are in control. Buyer tried here. No bueno. See you later. At the high. Come down here. Have no clue. Now you have the options. When you get the reversal and we get above these guys who were absorbed in the sellers. So now what you have is the sellers below, the buyers above. And as it's going right here, we're going to zero. Right here, you see the buyers. Change in behavior. Where's my support? It's down in here and it's over here. As soon as I break high, you could be out of the short, or, let me give you the or you're protecting out here and you're going to give all this back if it takes you out, subject to trade plan. For me, never mind what I do. I might, if it's in my plan, when I break above this volume, notice the sellers hit it. That's why this is resistance in my world. Break above, hasta la vista, or not. Now, what do we do with this? Put it back out. To where? Scale has to be ahead of the high volume. So if you got short here, we're using the fractals, okay? And this is where the buyers took over. So I know if I have buyers that are squeezing the guys out in this leg, the shorts, and if I run out of gas and I see sellers taking advantage, the same guys potentially that were sitting up here and up there, they go, oh, really? Here, have some more. And they sell it again. Then I got a scale here. And if I clear this, my next target is the next high volume area. This is the same as that, except it's higher time frame. So that was the trade. Now, we don't know where it's going. Let's remember. Let's look. So going to 0, right? Now, if you have questions, please post them. I'm going to come up for oxygen here. There's more trades in TraderLab, by the way. So this is too high, right? It's now resistance. I break low, going to 0, right? Let's look. So I don't know. This is high volume here. Let's label it. Okay. Resistance. What's this? Resistance. Break high. Warning, Will Robinson. Notice how we stop right here. Resistance. Rotation down. To what? Support. You could see it right there in the profile. I'm drawing these lines to help you see this. I'm not drawing lines when I'm trading. I'm just looking over here and I'm narrating it. It's conditional narration. If this, then that. If this is too high, then I break low, then that. And I get high volume here. And if I rotate back and hold this, if this, then that, then down. If not, then what? Then up. And if not, if I don't get below this and I clear this, then the short is over. Short's over. Here, you might have thought it was going to be okay, but you see the resistance. All we did here is test resistance. Resistance, resistance. Notice here, resistance, over. This, you see the change in behavior? So this is, and nobody gets all of it. Maybe you do. Me, haven't figured that out yet. I'm going to stop, look at your questions. Thanks for your patience. And now we have other trades that are going to set up. How are we doing in YouTube? You guys conscious? Oh, guys, how we doing? How you guys doing in YouTube? Please throw a thumb up in there. It helps the stream. Be sure to subscribe so you get notifications of additional education and streams. You'll find, I think, it very diverse with different approaches and, of course, maybe some things you'll find useful. So this is too low, only in hindsight. And we had our, don't forget, now we have VPOC migration. Now, here's the possibilities. If we rotate up and bounce off it, we can continue. And that would bring us back down here. If we cross above it, we are now in a different plan. And now we're going into a different plan. It's called mean reversion. And this is difficult. I got to label this, by the way. Variable high volume node. You do remember these, right? What are they? Retail prices that were auctioned that the market said, nah, I'm not paying that. We'll go see you later. The thing about all high volume areas is the market has a tendency to check them. I mean, think of it like shopping. Suppose, and this is more theory and concept of how the market works, you know, auction market theory. You can read about it in the Bookmap Discord Trader Lab community. You can use that link in the bottom of YouTube if you want to check it out. There's no cost. You do have to confirm your Discord user name and email address so we can protect the community from spam and all that juicy stuff. So once I'm cutting across these areas that were too high, remember, resistance, then the game has changed. The last opportunity for a short was going to be here. So, and now for me, since this happened, and now I'm back outside of the range, I don't have a short here. I have a what's going on here. And it can do anything. But once I cross over, it is now changed. We are now going into a different condition. It is called mean reversion. And most retail traders have a generic one size fits all, which we all understand because we've all done it. So if you're a retail trader, which I think most of us are here, anything you guys have done, I've probably done. I'm going on 45 years of doing this, and I can tell you one way or the other, I've done it. And that's not a badge of honor. It's kind of a badge of pain because there's random behavior here, but also you could throw a dart at a wall. And if you just hit the wall, you push buy or sell. I mean, and you're going to have winning trades. That's what gets us in trouble, in my opinion, is because that's just randomness. Everything works sometimes. That's why we get hung up doing things, trying to make it better, right? How many times have you said, I'm going to make this better? I would love to catch that last 20-point rotation. Let me throw my oscillators and everything over this, and I'll get it next time. Speaking of getting it, let's come back here. Questions, by the way. And please give a thumb up in YouTube. Okay, let's take a look here. So once we cross over, this sets up a different context and trade plan in a trade plan. Let's talk about it. And this can be difficult, of course, because the context or trend is up. Maybe. I think we can agree. But why would we be taking shorts in an uptrend? Well, we're taking shorts because at the top of the stream, I said, what does the market do? The market goes up to go down, and the market goes down to go up. So what did we do? The market went up on a gap to go down. Then the market goes down to go up. From where? No idea. Now we're outside of yesterday's range. We have choices. We can only take longs, or we can trade rotationally. And there's another statistic in here I have, and that's not even 9 o'clock yet. Look at that. At 9:30 Central Time, my time, we have something called the IB. The IB is the initial balance. That's what it's called. It's from Market Profile days. Peter Stottlemyre, who, by the way, taught me the market profile back in the mid-'80s at the CBOT. Just so you know, neither here nor there because I messed it up. Tell you, I was pretty smart. I said, I'm going to use my indicators with this. I'm going to make it better. IB high or IB low, taking out the first hour's high or low, has a 96% probability. You have to vet this for yourself. Past performance, not indicative of future results. Taking out the first hour's high in this configuration is 68% probability. So what does that tell us? Two things. When you cross over here, we have the first hour's high probability. We also have something else. We can go into rotational trading. So there's two possibilities. Outside in, back to here, it's called mean reversion, or just north. Let's see what it does. Now, I posted in Trader Lab that we were going to be looking, there's two conditions. When you cross over this, it's no longer directional trading. It is really more rotational trading. And you guys will see what this manifests itself as. Where was too high? Where do we come back? These are resistance. Now, it's sure we came here. But what's this? Mid VWAP. But where do I know it was too high? Here. So this sets up a possible mean reversion trade. And mean reversion is difficult. What's difficult about it, and I always talk about this, is where's the outside edge? Is it here? Is it here? Is it going to be there? Where is it? I don't know. See? Watch. We get VPOC migration. What does that say? Too low. Let's put this, move this here. Do you notice something different? Coming down, it was VPOC migrations leaning on high volume migration in all time frames. This is getting me annoyed. I'm going to have to adjust this manually. You can click and drag them very effectively. Me, not so much. So this is now too low. This was retail. So I'm thinking outside in, okay? If you took this short, you would take a stop. That's just the way it is. Because if you took this, you're going for this. When this migrates up here, it is saying this is too low. So I'm just saying if anybody took it. So let's watch. What are we doing? Where's the outside edge? Well, overnight VPOC. You do remember we were shorting that, right? So here's an outside edge. I couldn't do anything with this. I can't figure these out very well. Because what happens to me is if I get involved in something like this, I'm going to target this. And if I do take this trade, I don't like them because where's the outside? Now I know the context is up, right? And what do I see? VPOC migration. It's like we've turned the barge around and we're now moving in the other direction. It is saying that what's below us now is too low. So let's just keep it. Now remember this was important. Let's see what happens here. We blow right through it. So at this point, we are going for the first hour's high. This. So if you had a long, that's all fine. If you didn't, it's all fine. Now we have a couple possibilities. Remember, the trend is up. We have a high probability of taking this out. Two possibilities. Here's what they are. We have two trades here. One is called the IB continuation trade, looking for expansion. The other is called the IB failure. The IB failure is a mean reversion trade. To come back here. So let's take a look at this. Now, up to your plan. Now, what I did, I'm going to tell you what I did. I pulled back here. I was looking, I took the long trade. Now, I knew I could take both trades. I said, well, the trend is up in the higher time frame. I think I'll look for continuation. So I got long in this right here. So I looked over here at the IB and I said, well, buyers are here, sellers are here. High volume is here. So I'm looking for it to come outside. And I know these sellers were absorbed down here. So I'm looking, and I had a variable high volume node here. So this to me is support. So breakthrough support, or resistance, it's resistance, it becomes support. So this was my long. I took a long, and I'm going here for scale. Didn't miss me by that much. And I did not get my scale. My stop was under here. I took it stop here. Now, as soon as that happened, I turn around and get short because I had two trades here. And I couldn't tell you, I just take the trades. I don't worry about it. So this is resistance. This was my entry. This is my scale. I want to show you. It missed me by a tick, I think it was one tick or something. And this. So when this happened, and now my microstructure is right here. In other words, this is my actual trigger. Now I'm really getting into minutia, but I want you to see it. This is why I got long. I have my sellers going to zero, Lewis. I have location, high volume. See, this is how I'm putting the pieces together. I see my buyers here. I have my sellers. I know these guys were absorbed. I can put a long on, and unfortunately, I don't buy this. I'm get filled like in here, and my stop goes here. So that's my risk. I can handle that. And there's my scale. So I want you to see the trigger and the scale. And I think I had it like one tick in front of it, and it missed it by, like 2 ticks or something. Then I see this. No way to know. I break below here. As soon as I broke below here, it got stopped out. I'm leaning back the other way. And here's another way in. Here, So this is rejected. This is now the IBF. We break low, sellers take control. Here's micro volume right here. Let's look at it. So I pause. Microstructure is here. And, this is happening fast. Bing, bang. So once it breaks here, I have a valid trigger. I pull back to the volume in here. This is a short. Stop would be here or here, subject to. And what you're going for is mid and VWAP to take the stops out. Then, what do we know? We got this, and we have an outside edge down here called the low volume node. I think I narrated this in the Trader Lab. And look where we come back. So what this sets up is something called mean reversion. And what it is rotational trading. 62 was the target. The target out here. So you know why? And I posted in Trader Lab, but the target was 60 to 62. This is called a low volume node. This is all profilage. And what the auction is, remember how this works. If this is the retail price, like this is your $1 can of tuna, if it goes on sale and the shoppers perceive this is a heck of a deal, they're going to buy it, and then the price will come back to retail. If we get too high, the shoppers will sell it and will come back to retail. This is why this is a separate plan inside a plan. The target on the trade was 60 to 62. So it was this to this. And this was posted in Trader Lab. So this is a short I took to here. Now, the trend is up. How might you use this? You have choices. You can be playing the rotation, or you go, I don't want to sell this. I want to buy it. If you're going to get long, you'd want to get long out here. And where would you go? I posted this in Trader Lab. You'd be going here. Because there's shorts in the market, and the shorts that sold up here or on the next entry location potentially can get squeezed because the trend is up. So this can be a long to here. So let's look at it. Oh, there it is. So this in the Trader Lab is a short out here or no short and a long here. Now let's look a little further, and we're going to be caught up and now look at your questions if you have them. Now these are structured trades. Now some of it's more advanced, but it's all derivative of a similar process. It's just fractal. And when I'm using Bookmap, I can read the fractals. Like right here, I can see sellers are here, buyers got absorbed. There's 547 icebergs. Thanks for, 300, 800, there's 800, maybe 1,000 icebergs right in here. So that's selling pressure. So I can see the absorption and the break. That sets up a rotation. Now, suppose I want to get long. Where do I get long? I can get long here. If I didn't get long out here, I know where the outside edge is. I can look at these structures. I know this is the retail price. So if it's too low out here, then maybe it's too high up here. If I come back here, I can either come outside or I'm going to check the price. But what do I remember from the top of the stream? The market goes up to go down, which we did, and then the market goes down to go up. Trend is up. Target. So if you have a way in, you have a long. If you're waiting for this location, which I posted, you have a long. If you don't have a way in, you're just working on your crochet. This is a potential way in. Let's look at it. You have support here. You have an outside edge. You pull here. Let's look at it. And again, this is fractal. This may not be your thing, and that's perfectly okay. Buyers are here. Sellers are here. Sellers here are getting absorbed. When we break, so right here, you break high. Now, if you don't have a way in, which would be a pullback, you have nothing to do. You get a pullback here. For me, nothing to do. So off to the races now. Now we have another trade here called the IB continuation trade. That's the trade I took earlier that didn't work. I'm going to show it to you. So we come up, we pull back, we take this out, pull back to the IB. Let's look at the structure. You have this where the sellers were. That's the rotation. The buyers came in here, took out the sellers. Where do we pull back? To here. Sellers, they get absorbed. Now, this is more advanced. It's hard for you guys, for most who aren't practiced and have unconscious competence, to activate in this. So this is a long. And then you'd be scaled. And now you just hold it because we don't know where it's going. We got nothing up here. That's the last trade in Trader Lab. Hope you're getting something out of this. And these are not necessarily trades anybody ought to do. They're just trades. And you have to vet them and know if you have an edge. The IBC is appropriate here because there's stops. Once you take out the stops, we can anticipate coming back in or not. So for me, it's a long scale, and then it takes me out. I scratch the trade. It doesn't matter. Just go on to the next trade. Are you guys tracking? How are we doing in YouTube? Please give a thumb up. And remember, if you're interested in visiting the Trader Lab, there's no cost. There's a link in the bottom of YouTube, and you can access that anytime you like. Questions? Please give a thumb up if you're visiting in YouTube. This is the last long, and we're just hanging out, wearing a helmet, and sitting in a Barca lounger. You guys know what a Barca lounger is? Now, this can do anything. What happened here? These guys were absorbed. This is your resistance. There's the volume that went off. This is the delta. If I open this up, and with Bookmap, this is the thing that makes me really, besides the order flow and the heat map and all kinds of tools, I can read this. So what happened here? 153 buy stops. Thanks for playing. This is when they send you that gift basket. Buyers are here. No clue, right? What do I see here? A seller, okay, the iceberg, and the buyers absorb the seller. Now, wouldn't we think that the possibility is, with buyers absorbing the sellers, that we would continue? What happens? It goes the other way. What does that suggest? Too high. I'm going to draw a little line where you see that high volume node, because this is now my resistance. Let's see what happens here. Now the trend is up, but I now have resistance. This is absorption. Now you're seeing buy absorption, not sell. Why? We had sell delta and buyers absorbing these sellers, and they lost. The sellers, the passive side, overwhelmed these buyers. So that's what it tells me. Down here, it was the opposite. The sellers were here, and the passive side was the buyers who overwhelmed them. So you got your buyers here, you got your sellers there. This is kind of our sandbox, you know. So let's watch it. Questions? Please post them there in YouTube. And remember, these streams are available exclusively to Bookmap Discord Trader Lab participants, as well as the statistics and the library of webinars and all the additional education that's available in Bookmap. If you're a Bookmap subscriber, there's coaching and mentoring. It's exclusive for Bookmap subscribers, but there is a free digital version. So I don't think there's any reason you can't subscribe if you want to take advantage of all the education, on order flow and a lot of other elements. And get coaching and mentoring in the Bookmap Academy. But you do have to be a subscriber, but with the free digital version, download it and you can play with it. It even comes with data. I think it's pretty cool. They didn't have that when I started with Bookmap, which was maybe 2014 or 15. I couldn't tell you because I can't remember that far back. It's kind of blurry. I do remember 1980 when I started trading, and I remember that because I remember looking at a quote machine and I couldn't even figure out what was what. What is this? It was corn. CNM, CN, and July corn. Can't even remember Sept. Been so long ago, I don't even know what the months are because I haven't traded grains in a long time. So this is where the sellers were. This is where our support is. It's as simple as this. So you get risk neutral, and then if they take this out, then the trade's over. If we don't take this out, then we can continue. Since we're in kind of thin air up here, you need your oxygen. I have no reference point as far as levels. So now the levels I'm going to use are the ones that are being created in real time, and I can see them in Bookmap. Right here, we have a micro auction. You can see it. Too high, too low, retail. If this price is too high, I leave it. It's now resistance. This price down here is too low. Micro high volume structure, it's support. So if my stop is under here, I hang out here, I have my helmet on. It could come, if it takes this out, I'm out of the trade. My broker sends me a gift basket, maybe a dozen roses. If it holds this, then if I can get over this, then I'm going to start moving the stop up behind it using a trade management process. It's all based on TraderLab. Now there's another piece. I'm going to show you something a little more fractal. This is an auction. This is your 7-Eleven or mini mart down the street. The price is too high over here. We can come back and check it. Is it really too high? And either take it out, or it is too high at the moment. And now this is the current retail price. What we have, so think of this like this. Too high, too low, too high, too low, retail, I'm out of here. Now, same thing. Too high, too low, too high, too low, retail. So now I'm mean reverting in a fractal, rotational trade. But I fell out of this one. So this is too high. This is rotational. If I fall out of this, I can, go wherever I'm going to go. This is an outside edge. This is now a low volume node in the fractal. So think of it like, oh, it's on sale. That's retail. I'm not paying that. In the fractal. When we were talking mean reversion before, with the volume point of control down below, and we went down to that 60 or 62, it's the same, except this is a microstructure. So what do I know? Too low, support. What do I know? Resistance. What else do I know? Trend is up. What do I want to do? Do I want to sell it? No. Do I want to buy it? Yeah. Can it fall out of here and go to zero? Yep. That's why I know I don't know. Write that down. The outcome of any interaction with the participants is random. Also, we cannot predict what the participants will do at any moment. We can take what we call an educated guess, but that's all it is because there's a random distribution of outcomes. So let's look at this. Sellers overwhelm the buyers here, and it might only be temporary, right? The buyers overwhelm the sellers over here. Support, resistance. Now we're in between. This is like a sandbox. Too high, too low. Too high, too low. That's right. If this becomes too low, then we come back and check what was too high, resistance. That's what I know. In between, I don't know. questions. Hope this is making sense. This is auction market theory. How to get that number? Would your target be 800 above? Oh, 5,800? Are you asking me that? It's as good a target as any because it's a round number. We have liquidity sitting here in the book, 360. This would be an area to observe. Let's see, at the strike, there might be some at 58. Yes, it's resting liquidity. This is the Trader Map Lite. It filters out a bracketing algo so I can see the liquidity. So this is extremely useful because we want to see what's in the limit order book. It's a great tool. And with rhythmic data, you can see as far up as you want to go, wherever that is, which, So right now, we have this. Now, the thing with liquidity is we don't know. I mean, are they going to trade out or are they going to pull? It's like stepping on a banana peel. So you don't know. So when you're coming up into liquidity, often what's going to happen is, first of all, you don't know what they'll do. If they pull, they open the door. If the buyers consume them, we're going to just blow through them. We may react off of here. And if we react here, and this is not a recommendation, and we break above it, so you might go bang, 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 come back and check it, and then continue. We actually have structured trades related to order flow and liquidity in the Bookmap Discord Trader Lab. They're in those 60 PDFs if you are inclined. This is a bracketing algo. You see it? So it just sort of distorts things. The heat map is doing its thing, but I'm not interested in a bracketing algo. I'm interested in the liquidity, the resting liquidity. Now you can see it up here, but this is more volume in a short term. So the heat map reflects this. So when I want to see things that are more material, see the difference? I'm looking at this. So I have two levels. Make a note of the levels, 5,800 and this. Let's see if we can see some more structured trades. Now remember, we're just sitting along here, and there's our resistance, right? Why? Too high. Now, subject to how you develop your plan, and everybody creates their own trade plan. It's kind of like this is a foreign language. If this is too low, where was resistance? It was there. Might I, if I know this is resistance, might I be scaling here or at least aware of it? I've got to get over this to go up to those other targets, right? That's support. That's resistance. This is the pullback. We're still holding support. So if I clear this, then, we're off to the targets above. If I can't get past here, why am I not getting past here? Anybody know why at the moment I'm not getting past here? And by the way, is this a double top? I can't see. I think it is. Guys, is that a double top at 88.75? Yes. Okay. Guys, double tops, weak structures. A double top typically is an exhaustive structure, and it's not a reversal structure. It's a weak structure. I know early on I used to think, a double top, let's short that. And it might be the high of the day, you know that? But over what I've observed most of the time is that it just actually sets up that this is going to fail. So I know this is resistance. I now have a double top, I believe. And as long as I don't take this out, these guys are on the hit parade. Let's see what happens. And it's not a trade recommendation because, it could come it could come anywhere, right? This is trading. So why did we stop here? There's a passive seller up here. And so far, the buyers have not been able to take these sellers out. However, it's a weak high. So if we rotate, and I'm assuming, of course, the trade is to hold this. And if we don't, we don't. It's just one trade. That's the way it is. This is still on the hip parade. Let's see what it does. Does that make sense? And remember, by the way, guys, if you're in YouTube and you're visiting, thanks for visiting the Trader Lab. This is built on the idea of Trader Lab is to help traders build out the business of trading, to have structured, vetted trade plans that have a statistical edge over a large sample size of randomness, just like the casinos extract their dollars from the gamblers over a large sample size of interactions in a random environment. The thing that's not random is the games the casinos play and how they play them. They're exactly the same way. Otherwise, it's just randomness. I mean, randomness in a random environment is the old saying in computer world. Remember this? Garbage in, garbage out. Personal opinion, but I built trading systems, and I spent a lot of time with heavy math and processes that are somewhat indicator based, not the standard indicators, but let's just say derivative indicator based. And the idea was with systems, you would do walk forward testing and ultimately curve fitting, which is what most of you guys do. When you go back and tune and tweak, we've all done it. Because you're trying to capture history and think it's today. Well, yesterday was unique. Today is unique. Last week, last month, every moment is unique. How can we take the past and assume that today is yesterday? It's not. It's a whole different day, a whole different participant mix and behavior. So that's why curve fitting and tweaking and tuning doesn't work. And the idea that yesterday there was a big range, yesterday I narrated a 40-point trade in the Trader Lab. How many of those are you going to have? Not many. So do you build your approach on that big trade, hoping to get it next time, whereas in the meantime you go out of business? That's what most retail traders are doing. I created a term for it. It's called Trader Groundhog Day. Waking up doing the same thing. And the reason we do it is because we see random behavior and we think that, gee, that worked. If I make it better, I'll do better, right? It's very logical. But that is not in alignment with this business, unfortunately. The business we're in is gaming. I can tell you the casinos are not making the games up, and they're not tuning and tweaking their games. They're just playing the games the same way because they accept that losses, which are inevitable to the gamblers, is overhead and cost of production. And in spite of it, paying the gamblers and giving you the cocktails and the ticket to the buffet, they're doing really well. Maybe if we use that as a template because it's successful and build our business the same way with the same process and only use trades similar to their games that have an edge and accept the random outcome and have the discipline, which is very hard for us because we're human, to actually do the plan and execute it, that we'll have the same results if we do the work up front to only interact where we have an edge. Now, that's very different than most of us think the business is, because we think the business is indicators and prediction, right? I mean, if I'm speaking to you, I'm talking to me too, because I've been there, done that. Everybody in this business has done it. It's the differentiation is, can you survive in the business long enough to reverse engineer what doesn't work? We learn from what doesn't work. And one of the ways to learn what doesn't work is to think like a retail trader, but not act like one. Final questions. Remember, we're looking for this to go, not a recommendation. We are holding along from here, and that's where this trade goes to the happy hunting ground. Please give a thumb up in YouTube. If you want to join the Trader Lab community, there is no cost. You could access the Trader Lab, download 60 PDFs of these structured trades. They look like this. Circles, arrows, everything you see me doing. Now, I'm not a vendor. There's no course. There is a group of traders that come together to leverage. It takes a community to actually in my opinion, sustain the potential for a career in this business. Here's our resistance. We're looking for this to go. If it doesn't go, remember, support's out here. If this goes, the trade would scratch, and then your broker's going to stop by your house and give you a hug. But there's no way to predict what will happen. This is part of the joy. Where was resistance? Wasn't it there? Isn't it there? Double top, right? Do we think this is going to go? Statistically, yes. Will it? No idea. That's why we don't need to be right, because we can't predict what's going to happen. I certainly can't. Certainly tried. So I figured out the better thing for me to do is not work on prediction, work on alignment and trade management, get risk neutral, and as they say, it's a casino term, let the chips fall where they may. Please give a thumb up in YouTube. And by the way, if you're in YouTube, copy the link if you're interested in watching this later. This is typically only available to Bookmap Discord Trader Lab participants to reverse engineer, screenshot, compare to their plans, tweak, tune, and educate themselves. Because this, you'll never stop learning. You'll always be trying to improve. We're always trying to improve. I'm going on 45 years of trading, both professionally and, of course, now I'm sitting out here with you guys. I'm always looking to see something. Am I seeing something? Can I improve? What can I do better? Can I execute and save a tick or two? You know, what? How do I manage my trade? All of that. I watch these streams also because I want to see what I didn't see. What did I miss? So this trade's going to be over. This is still valid for a long. Let's watch. We did not take the stop yet. Let's watch. It's going to, though, by the looks of it. So this trade's over, then it's just the next trade. That's all there is to this. It's not any deeper. Let's watch the structure here. Right here, there's absorption. 101 sell stops came out. Let's watch the behavior, not a trade recommendation. Right here, we want to see the buyers were here. We have our sellers up here. Let's watch the structure, not a trade recommendation. Looks like it's going down. So there's nothing to do yet. Nothing to do. So that's it. That trade would scratch. There's no problem with that for me because it's just part of the random distribution. I'm still going to be looking for longs. Not a recommendation. It doesn't matter. Please give a thumb up in YouTube. And I was going to say, if you're in YouTube, copy the link, forward it over to your buddies, subscribe to the channel, give a thumb up on the way out. It helps the stream. Remember, I'm not a vendor. There is no cost to become part of the Trader Lab community and take advantage of all the additional education, stocks, options, crypto, of course, futures, swing trading, market maker behavior, and a lot more. And if you become a Bookmap subscriber, there is a free digital version. There is a link down below. You can then become part of the Bookmap Academy for coaching and mentoring on order flow and various other tools. This is a structure setting up right here, guys. Notice where we came. We tested this. We tested this. Potential long, not a recommendation. Let's look here. I'm out of time. I got to go. They're going to, they pulled the plug over here, and I hope you got something out of this. If you're looking for more, you want to download the 60 PDFs, become part of the Trader Lab community, and access a substantial library of webinars that I've done, some up to 5 hours long of real-time narration, so you can see this under different configurations. Click the link down below. Visit the Bookmap Discord Trader Lab community. There's no cost. You just have to verify your email. Make sure you're not a spam. Thumb up, please, guys. Thanks again. Appreciate you visiting Trader Lab today. And I do look forward to seeing you all tomorrow. Have a great day and follow your trade plan. And if you don't have one, maybe you might want to get one.